Hi there and welcome to my Counting 1110 review for the final Chapter 7. I have good news for you. This chapter has extremely light coverage. It's going to be a quick pencast and not too much for you to have to study. There are two objectives we want you to master in this chapter. The first main idea is to learn how special journals modify the first few steps of the accounting cycle. And the second thing we want you to learn, second step, helps us learn how subsidiary ledgers add an additional step that allows us to keep track of who owes us money or who we owe money. And although there could be several subsidiary ledgers in any given business, we're going to learn two in this chapter: the accounts receivable subledger and the accounts payable subledger. Having said that, let's get started with special journals. Special journals require that we sort transactions into like kind, and then we post just the totals, and it will cut your posting time down 100 to 1. That's great news. Let me draw a picture of how they modify the first step of the accounting cycle. Our accounting cycle, as we've learned it so far, has us record all of our transactions in the general journal, post it to the general ledger, and to prepare an unadjusted trial balance to prove the equality of debits and credits. Let's see how special journals change this. Now, instead of having just a general journal, we're going to have 5 journals. And oh, I can hear you groan. We'll still have the general journal, that's never going away, but we'll also have a sales journal, a cash receipts journal, a purchases journal, and finally a cash payments journal. And what we'll do is record transactions in these journals all month long and post just the totals. Let's not get ahead of ourselves. So what goes in each of these journals? Well, in the sales journal, you pick up just credit sales and nothing else. In the cash receipts journal, you record all money from whatever source you receive it. All money that comes in to a business gets recorded into the cash receipts journal. A purchases journal is where we record all credit purchases. So if you buy anything at all on accounts payable, it goes in the purchases journal. And the cash payments journal is where all money spent is recorded. Usually, this is checks. So it pretty much becomes a check register. Every check accounted for. If you think about it, there's only 2 ways you can denominate transactions in our economy. You can do credit transactions, or you can do cash transactions. And these 4 journals will accommodate all of those. And anything else that doesn't fit is recorded in the general journal. We'll always need it, if for nothing else. Adjusting entries, closing entries, and fixing mistakes we might have made. And the way it works is you must record transactions in these journals, and it has to be in debit credit format, because when you post them to the general ledger, you still need the general ledger to balance, and you still need the adjusted trial balance to have debits equaling credits so that we can make financial statements that balance. But now, instead of doing a journal entry a line at a time in the general journal, we'll sort transactions into each of these journals as they occur all month long, and at the end of the month, we'll total the journals, and then we'll post just the totals. So for the sales journal, you'll post just the total of your sales and the total into your accounts receivable and the total into cost of goods sold and the total into inventory. You could have 10 sales or 1,000 sales, and you would just need to do those 4 items. For cash receipts, the same thing. Record into it all month long, and at the end of the month, total it and post just the totals. And again, all the journals must maintain debit and credit formatting so that when you total them and post just the totals, you're still in balance. What ends up happening, here's an example of what I mean. In the general ledger, instead of recording each sale, accounts receivable and sales, cost of goods sold, and inventory, and making 4 postings for each transaction, that's what we do in the general journal. Sorry, I said ledger. In the general journal, that would be how we would record it. But in the sales journal, we wouldn't record it in that fashion. We'd have the name of the account who bought from us, and we'd have an accounts receivable and sales amount, both of those getting put in one column because they're the same number, and cost of goods sold and inventory, debit and credit, going in another column. You would list all month long all the customers that bought things from you. Put an amount in the accounts receivable and sales column and an amount in the cost of goods sold and inventory column. And you might have 10,000 of these, and at the end of the month you would total this, and you would do 1 hit to accounts receivable for all the sales, 1 hit to sales for all the sales, 1 hit to cost of goods sold, and 1 hit to inventory. So instead of 4 times for each transaction, it would be 4 times in the journal in total. Just think of how much time and postings you won't have to make. You will be saved this. So we really like special journals. Let's move on to subledgers. So here's a picture of how subledgers fit in, special journals fit in. I've listed them. And I've added subledgers. So we have 5 journals now where we record transactions into them, total them, and post just their totals at the end of the month. And I've only listed 2 general ledger accounts because that's all I need to see right now. And then those totals are transferred to the unadjusted trial balance at the end of the month, and it still has debit equal credit equality, proving the quality of the posting. So how do subledgers fit in? Well, we have an accounts receivable subledger where we keep track of our customers by person. I'm not feeling really creative, so I'll have customers A, B, C, and D. And an accounts payable subledger where we keep track of who we owe. Let's say we owe client 1, 2, or vendor 1, 2, 3, and 4. Subledgers are filled out along with the special journals daily as you progress through the month. And as credit sales are recorded in the credit sales journal, the sale goes just into the accounts receivable for the person who it relates to as well. Anytime they make a payment, cash receipts are listed in the cash receipts journal, and those numbers are also transferred into the accounts receivable ledger. So at any given time, we know who owes us money and how much. Let's say your credit sales for the month totaled $10,000. Customer A, as it happened, would have their amount recorded. So let's say customer A picks up $2,000. And it happened sometime during the month, and it's recorded in the sales journal and transferred into the subledger. Customer B has a sale of $6,000. So it's recorded in Subledger as the month progresses. Customer C has sales of $1,000. So we're now at $9,000. And customer D has sales of $1,000. And we list these line by line from the sales journal into the accounts receivable. At the end of the month, the sales journal will be totaled and accounts receivable will be posted. And the amount of the accounts receivable will be the sum of all the hits to the subledger. So you can see that $10,000 was posted in the individual accounts in the subledger, but just the total came in from the sales journal because we have post only totals. In that way you know who owes you how much money. Let's further assume that we received cash from some customers. So I'll put the $10,000 there. Let's say we received cash from customers totaling $8,000 during the month, listed a line by line. Let's see if you can figure this out. Customer A paid $2,000. Customer B paid some on their account. They paid $3,000. Customer C paid $1,000. I think I better make customer B be $4,000 if that's okay with you. Customer A paid $2,000, customer B paid $4,000, customer C paid $1,000. How much must customer D have paid if you know the total's $8,000? 2,000 plus 4 is 6,000 plus another 1,000. You know customer D must have paid 8,000 because you know that in total 8,000 was paid in the cash receipts journal. I told you that. Well, at the end of the month, after you've listed all of your cash receipts, you'd post it to the general ledger. One of the postings will be into accounts receivable, and it will be the total payments paid. So there's a rule in place here. The rule is the sum of the payments posted into the subledger. The payments or charges, either one. Let's put both of those there. The sum of the charges or payments posted into the subledger accounts must equal the total posted into the control account in the general ledger. The control account is what we call the accounts receivable in the general ledger because its balance controls the subsidiary ledger. And accounts payable is a control account in the general ledger for the accounts payable subledger. Let's see what the balance in our general ledger is for this. 10,000 minus 8,000 is 2,000. So if we followed the posting rule, the balance in our accounts receivable subledger should equal that. And notice we have no balance for customer A, a $2,000 balance for customer C, no balance for customer D, and no balance for customer C, and no balance for customer D. So the balance in our subsidiary ledger equals the balance in our control account. In fact, at the end of the month, you usually prepare an accounts receivable subledger listing. And the only thing this ledger does is list customers and their account balances. So we have customers A, B, C, and D, and they have amounts. A owes nothing, B owes 2,000, C owes nothing, and D owes nothing. And the total of our subledger then equals $2,000. So the total of the subledger listing equals the balance in the general ledger account. And the total is really just brought forward from the subledger accounts. My example isn't too exciting because there are only 4 customers, but if there were 4,000, it would be more interesting. I would like to know if you had a debit or credit memo issued, you might be getting a hit from the general ledger, or the general journal as well, but we didn't have any debit or credit memos. So where does information for the accounts receivable subledger come? From credit sales to customers and cash payments received from customers, with maybe a debit or credit memo coming in from the general journal. Let's look at the accounts payable subledger now. All month long, let's assume we had credit purchases totaling, let's say $12,000, and during the course of the month, we paid $9,000. If you looked at the individual lines in the purchases journal, let's say you noticed that we purchased $6,000 from vendor 1, $3,000 from vendor 2, and nothing from vendor 3. How much must we have purchased from vendor 4? Can you answer that? Well, you know somebody must equal 12,000, and we know of 9, so it must have been a purchase of 3,000. At the end of the month, all the journals are posted and posted into the general ledger. At that time, you will credit accounts payable for $12,000 from the purchases journal. And you can see that the purchases journal and the subledger agree. Now we also said there were some cash payments made. Let's assume when we go through the cash payments journal, a line at a time, that we paid off the balance to customer 1, and we paid $1,500 to customer 2. How much did we pay to customer 4? And you can say, well, 6,000 plus 1,500 equals 7,500. I need another 1,500 to make that total work. And that's in fact what we would have paid to customer 4 because of the posting rule. The sum of any debits and charges, or charges and payments, posted in the subledger must equal the amounts posted into the general ledger. Well, at the end of the month, you would post your special journals, and the $9,000 would get posted into accounts payable from the cash payments journal. And at that point, you've posted the subledger daily and the accounts payable control account at the end of the month. What's the balance in our accounts payable control account? And you can see it's $3,000. If we follow the posting rule, then when we do our accounts payable subledger listing, it will agree. Notice customer 1, or vendor 1 is paid. Vendor 2, we have a balance of $1,500. Vendor 3, we paid in full. We don't owe them anything. And vendor 4, we owe $1,500. We have two balances. And just like you did an accounts receivable subledger listing, you do an accounts payable. Let's not make that an R, huh? An accounts payable subledger listing as well. And in this listing, you would list your vendors. And we have 4. We list them by name. Vendor 1, we don't owe anything to. Vendor 2, we owe $1,500. Nothing to vendor 3. $1,500 to vendor 4. So you would owe $3,000. And you know who by name, address. You know everything about it. And you also know that it ties to the subledger. So the purchases journal and the cash payments journal provide probably 98% of the entries. But you might have a debit memo that you made. Let's say you returned something, and that could come down from the general journal and need to be posted as well.